Okay, guys. Now, but this particular question number 55 is going to be quite lengthy. Okay, so let us just have a look here. So, here in this particular question, it is said that on 31st December 2019, firm gets dissolved. Okay, so for dissolution process, we need balance sheet. Okay, and we don't have the balance sheet here. So we need to prepare balance sheet for 31st December 2019. But how can we prepare balance sheet for 31st December 2019 when we don't have balance sheet for the year ended 31st December 2018, right? So what we have to do is that we have to first prepare balance sheet for 31st December 2018. Then after that, we have to prepare balance sheet for 31st December 2019. Okay, then we can actually enter into the dissolution process. So what we have studied from first chapter, that is your fundamentals of partnership accounting, we are going to use the same thing here. Okay, so for the year ended, okay, so remember that in this particular question we have to prepare the entire accounts for the year ended 31st December 2018 first. Okay, and in second we have to prepare the accounts for 31st December 2019. So let us start with the first year, that is for the year ended 31st December 2018. Okay, and remember that this is not your profit and loss account, but it is your profit and loss appropriation account. So for the first year, that is 31st December 2018, we have net profit of rupees 24,000. Okay, so here we have the interest on capital. Okay, interest on capital is provided at the rate 5%. Okay, so let us write interest on capital of all the partners: Bijoy, Somani, and Panesar, 3,000, 2,400, and 1,800. Okay, and this total will be 7,200 for interest on capital. And the remaining amount, okay, which is your 16,800, which is your divisible profit, should be shared between the partners as per the ratio of 4 is to 3 is to 3. So this is your distribution of the profit, okay, of this divisible profit. Okay, so after this we close this particular profit and loss appropriation account and we prepare partners current account. Okay, remember that here it is mentioned that in this second line it is mentioned here that their respective fixed capitals. So this is the hint to you that you have to follow the fixed capital method. Okay, so as per the fixed capital method, what we do is that we transfer whatever the adjustments are there in partners capital account. Okay, whatever the adjustments, okay, adjustment regarding your interest on capital, share of reserve, this commission, salary, okay, profit or loss, all these items will be transferred to their current accounts. Okay, so we have interest on capital. Okay, now don't try to find the balance of current account, it is not mentioned here in the question. And if by looking at this question if you get confused, oh, there is no balance of current account, how can we start this? There is no issue with the balance of current account. Okay, you may not have the balance of current account. Okay, so then you can generally just start preparing partners current account without having any balance. Okay, so first of all, put the item interest on capital. Now put all the items here. Okay, interest on capital. Okay, you know that from the first chapter. Okay, again we have share of profit. Okay, so now put all the share of profits. Okay, so in the question it is mentioned that each partner's drawings were 3,000 per year. So per annum they withdrew rupees 3,000 each. So their drawings will be in the debit column of your partner's current account. Okay, so 3,000, 3,000, and 3,000. Okay, so now find the balance here. To balance CD 6720 for Bijoy, and for Somani it is 4440, and for Panesar we have 3840. Okay, so now we have the balance of this partner's current account. Okay, so in the year 31st December 2019, we can start with this balance. Okay, so after this, now prepare balance sheet for the year ended 31st December 2018. Okay, now remember, we are still in this first year, 2018. Okay, so let us prepare the balance sheet. Now put all the capital accounts, okay, which are fixed: 60,000, 48,000, and 36,000. Okay, the total will be 1,44,000. Now put all the balances of your current account. Okay, 6720, 440, 3840. The total will be 15,000. Now how much is the total? 1,59,000. Okay, and we know from class 11 that assets is equals to capital plus liabilities. Okay, so that is your basic accounting equation. Okay, so whatever is the total of your liabilities should be the total of your assets column also. So the total of this asset column should also be 1,59,000. So we will write here sundry assets 1,59,000. Okay, so this is your logic behind this. Okay, so liabilities should equals to assets. Okay, and I hope that you have done this kind of uh, practical question in class 11 in a chapter called accounting equation. Okay, so you know that particular thing, right? So we have prepared the balance sheet of 31st December 2018 successfully. Now let us move on to the second year, 31st December 2019. Okay, now let us prepare profit and loss appropriation account. It is not profit and loss account, but appropriation account, okay, for the year ended 31st December 2019. And then we have the profit of 30,000 out there. Okay, so the same thing, that is interest on capital. Okay, interest on capital will be same because the capitals of partners are fixed, and interest on capital is provided at the rate 5%. Okay, so total will be 7,200. Okay, now this profit, okay, this profit of 22,800 will be shared between Bijoy, Somani, and Panisar as per their profit sharing ratio of 4:3:3. Okay, so these are the amounts. Okay, so after this we prepare partners current account. Okay, so in partners current account, okay, what we do is that we will write with the we start with the balance, okay, which we already have found in the first year, that is 31st December 2018. Okay, so here is the continuation of that particular work. So we start with this balance. Okay, so this will be your buy balance BD in the year 31st December 2019. So we will write the balances. Okay, so then interest on capital. After that we write share of profit. Okay, and then we write drawings. Okay, after writing the drawings, now we will find the balances. Okay, now these are your final balances of partners current account. Okay, so after this we will prepare the balance sheet. So this is the balance sheet that we wanted actually. Okay, so we will write the same thing, that is partners capital account. Okay, this is same 1,44,000 total. This is actually Bijoy, Somani, and Panisar's capital, which is 60,000, 48,000, 36,000 respectively. Okay, after this we will write current accounts. Okay, so the balances which we have extracted from here. Okay, 1580, 10680, and 9480 for Bijoy, Somani, and Panisar respectively. Okay, so this amount 1,44,000 and 36,000. Okay, we have written here, but we don't know what is your sundry assets and what is your sundry creditors. Okay, so now have a look at the question one more time. On 31st December 2019, when the creditors were 20% of the total assets. Okay, 20% of the total assets it is talking about. So whatever is the whatever is the amount of total assets, its 20% is going to be your sundry creditors. Okay, now let us see the next slide here. We all know this concept, that is your assets is equals to capital. Okay, this is capital plus liabilities. Okay, so this is your asset. equals to capital plus liabilities. Now we all know that in this particular question it is mentioned that liability is 20% of total assets. Okay, so whatever is the existing liability, okay, whatever is the this existing liability, that is your asset. Okay, 1,44,000 plus 36,000 is equals to how much? It is your 1,80,000. Okay, so the existing asset, that is 1,44,000 plus 36,000, it actually represents 80% of total assets. Okay, excluding 20% for liabilities. Okay, so it is actually representing 80% of your total assets. Okay, so let us try to find the total assets of the firm. So the total assets of the firm is going to be 2,25,000. So once we have this balance, we can easily find the amount of sundry this creditors, okay, which is your 45,000. So now once we find this particular amounts or balances, we can simply write the amounts. Okay, 45,000 and 2,25,000 rupees. Okay, so this is your main logic here. Okay, now we can prepare realization account finally. So looking at this particular balance sheet of 31st December 2019, we can prepare our realization account. Okay, so only two items are there. Okay, which is your 45,000 from this sundry creditors. Okay, and from this sundry assets we have 225,000. So put the amounts, that is sundry creditors 45,000, sundry creditors 2,25,000, and it is mentioned in the question that the assets were realized for rupees 1,56,000. Okay, and the creditors, they were paid only 40,000. Okay, so this is the case of your loss on realization, and this loss is your 64,000, which will be shared between partners as per their profit sharing ratio of 4:3:3. Okay, so once we have this loss, now we can prepare partners capital account. So till now we have prepared partners current account. Okay, so this is your final partners current account. Okay, so which we have taken this particular thing. Okay, so this particular loss will also be transferred to your partners current account. Okay, because we don't have to adjust all the items in our partners capital account. Okay, so it is our final solution. Instead of making this partners current account, we could do all the items here also. Okay, but I'm just trying to show you here that we start with the balance 1580, 10680, 9480, which is already mentioned in the balance sheet. Okay, so then after that we write the loss that we have faced in the realization. Okay, and then we have the negative balances of your partner's current account. Okay, so then we will now transfer these balances to their partner's capital account. Okay, so we start with buy balance BD. Okay, 60,000, 48,000, 36,000, and these balances will be included here in the partner's capital account finally, and we have the final payments which is to be given to partners. And here our question gets finished. Okay, we just have to prepare prepare realization account, partners capital account, and current accounts. But you can simply make bank account also, just to check your calculation, okay, whether it is okay or not. So you can prepare this thing, bank account. Okay, you can write two realization account, 1,56,000 for the assets realized. Okay, 1,56,000, and the payment that you have made to uh, creditors and to the partners. Okay, so just put the amounts here. Okay, so the total is sorry, this is not 1,59,000. It is going to be your how much? It is 40,000. Okay, so please make this uh, correction. Okay, I don't know why there are some mistakes here. Some typing mistakes are there. Okay, so it's going to be 40,000. So let me make some change right now. So this is actually your long method. Okay, to see this particular sum. Okay, so there is also a shortcut method. Okay, So if you want a shortcut method, please let me know. So this way I will be able to know that you have watched this particular video also. There is a shortcut method. Yes, there is a shortcut method. Okay, and don't be worried about your marks. No marks will be deducted. Okay, by doing so, because it is an authentic method. Okay, so please just let me know that you have watched this particular video and you want this thing. I mean, you want the solution in a shortcut method. Okay, so out there only we will prepare a partner's current account. Okay, so that way we will be solving this particular question. Okay, so yeah, you may had a hard time maybe understanding this particular question, so just break it up. Okay, this particular question, like first this realization account for 2018. Okay, now break up this particular sum in three different aspects. Okay, 31st December 2018, 31st December 2019. Okay, just the maintenance of your books. Okay, then after that we get the balance sheet of 31st December 2019, then you can proceed with your dissolution. Okay, so first year, second year, and lastly depreciation, realization. This is your profit and loss appropriation account for the first year, 31st December 2018. Okay, so one, two, three items. Okay, so first three items is for 31st December 2018. Okay, so again after that these things, one, two, three. Okay, this is for your 31st December 2019. So after that uh, you will get this particular calculation done here. Okay, regarding this sundry creditors and the assets. Okay, in the last year, that is 31st December 2019. Okay, so after you do this particular calculation here, then you can proceed with your realization. Okay, so after that you know how to do it, isn't it? So let me know if there is any kind of confusion, because this is a very lengthy question.